All right, hello. How's everybody doing today? Hope everybody had a good end of the week. Everybody's working hard, was safe, doing your thing. Today we're gonna be continuing the first video, getting to some key points about the turtle soup, as well as go over some new points. Implement time, power of 3, AMD. Gonna reinforce the high time frame over the low time frame. Get into, where we set our safe stops at, um, as well as where we set our targets. Um, gonna be tr gonna try and be more concise today. Get straight to the point. Go over these trades. Go over a couple things. Okay, so here we have the DXY hourly chart. We can see that we have an expanding market. Um, we're leaving multiple fair value gaps open, moving up very quickly. Then we come in, we start ranging. Okay, we don't take the low. We SMT, expand up some more, retrace down, leave a gap over, not overnight, but there's like an hour period where it closes. I don't technically know what you would call it, just when the market's closed. But we gap down, range for two candles, close within both wicks, sweep the sell side level, form a decent rejection block, and we're in. Um, I was actually in like at the bottom wick, and I'll show you exactly where I got in and why. Because technically I'd be getting in with a full black candle, um, but that's also where we'll go over where to keep a safe stop. Um, we've come back up, form a rejection block, close, within the rejection block, uh, range a bit, and then break the range, form an order block, react to the order block, come down, maybe have an SMT here, or just, sweep these inner ranges and come down, close within the wick, and then expand up in the form of breaker and, inversion of the end dog or whatever you want to call it. Gonna slide this over here. We'll go into depth in these a few minutes here. And this is also DXY. And this is going to be the hourly chart as well. Um, so we see this is where I got in, and we had an SMT Turtle Soup taking these lows. We had an SMT here as well as at these lows. And then I got in right off of this wick, and we'll go into more depth in that shortly. But as we can see, I got in here, um, and I just didn't like quite what I was seeing. Um, Time wasn't aligning here, as well as I thought we were gonna retrace down, and we did. Um, but I went ahead and waited on this trade, um, just for full confirmation. We formed the breaker here after the smart money reversal. Um, 1 hour. This may the 4 hour rejection block. I'm pretty sure was strong here as well, but decent 1 hour candle. 3 hour formation, but we don't fully, form the three candle formation. But what we do is we do range, and we may have formed a SMT here as well, with JPY forming it, or JPY USD forming a new high. And SMTs don't move the market, but a lot of people, and one in particular person, only takes trades with SMTs. So I've started to put a lot more emphasis on them here recently. Um, and you only open doors when you start, trying to, think in different ways, and not just completely change your trading model or, do anything like crazy like that, but, just try and add on to what you already know. And, like when ICT, started releasing the charter stuff, and he said, it's not gonna, change your lives or, even almost change the way you trade, because it shouldn't. You should keep trading the way you do, um, unless you feel like you're lost in the market. Like you're trading retail, like with lines and support and resistance, and hoping that this is support, and hoping that this is resistance, because we bounced off of it 4 or 5 times. But but yeah, you can see with the type of trades that I take that there's some uh, reoccurring signatures, as well as just obvious signs of sweeping a buy side level or sell side level before I go ahead and even look for an attempt at a long, or don't always have to sweep, because like I said, SMT SMT divergences, whatever you want to call them. I just call them SMTs. Um, if we have a very obvious, high probability one, um, and you can see I got out of here, on this trade, not because I was afraid of it going down, but I wanted to put the importance of, getting out. We started ranging here, and I didn't want to, put myself in a position where we come down and maybe, sweep this level and then come back up. Um, so I just go ahead and get out here roughly around the wick, because we're kind of struggling to close, you know, above it, but I don't want to say, like struggling to close above it, because, we're not just going to keep going straight up. We have to, stop people out somehow. Um, so we get out here, and that is also roughly 50% of the range. It's a little bit above, just because I'm not going to get out here, uh, just because of what I'm seeing with the buy side level here. And, I just, I think I can, you're not being greedy, but I think I can get a little bit more than that. Um, so yeah, well, same chart, we'll go over that as well. And as you can see with the last trade as well, this is the daily time frame. See, we have our wick aligning, and I'm in right at the, the bottom there. And then we completely flip around. Um, you can also call it a open, low, high, and then close. And the reason you can say that is because the wicks are somewhat the same size. So you open low, you went high, and then closed, if that makes sense. And that's doesn't always have to be the case, but that's, to maybe open your eye and just see the open, high, low, close, or because you can always open low, high, close, and the wicks be completely different sizes. Okay, I'm not saying that they have to be the same size, but I'm saying within that candle you can see, we open here with a big gap. I mean, a huge gap. It's a pretty large gap, almost like this, right? Um, but we open low, high, and then close. Okay. And then also, from a obvious PD array on the daily time frame, order blocks down here, fair value gaps up here, wide open fair value gap. You can call this a Reaper, BPR. Um, but yeah, we'll go ahead and go into the trades. Okay, so as you can see, we have a good couple of ranges here. We have right here. Alright, and then you can mark this whole range, but I don't want it to look too sloppy. And then down here as well. So sweep buy side level. I don't want to say it's an obvious market maker sell model, but have our smart money reversal, sweep, and this is a turtle soup short. Okay, and then we accumulate, and then break lower. And on this chart, obviously, or I would hope it be obvious, ahead and delete this stuff, that we have, this pretty significant gap. And I also took a trade way back when, here in December, if you didn't see that long there. I'm not gonna sit here and look for the screenshot of it, but it's same type of thing, and just trying to reinforce that. So you can see that turtle soup here, and I think I just longed like into the breaker order block. Anyway, we can see on this chart here that we have a really obvious gap. Okay. And it doesn't get filled at first, it's a breakaway gap at first. But eventually, after we form the sell model, we reverse from what is another pretty obvious PDA. We then react, form a smart money reversal, and then come down to our obvious gap, which we have two of. Okay. And before you're like, oh my god, he's boring the death out of me. We're going over this to enforce, seeing the change in order flow, seeing the reversals, seeing, where liquidity is engineered, see where we're reversing at, see if there's any super obvious gaps, as well as, the difference between the low time frame and high time frame, which we'll get into. So deliver from the high time frame PD array down into this obvious PD array, and we can somewhat put the wick here because this is the 4 hour, and you can see how quickly we deliver back from it. So within this, there's probably some small low time PD arrays that are not mitigated. We also had an SMT here, which leaves some low resistance. Okay. Low resistance liquidity, that is, which this whole thing looks like low resistance liquidity, and it almost completely looks like a sell model. But there's some reasons to me that I think that it's not, purposely from us bullishly delivering from here. And then we'll have to get into a higher time frame to go over that. But I'm going to go over a couple more things. Well, actually, we'll go into the higher time frame because, like I say, we like to work our way down. So we can see that we start forming a range, sweep that low into this monthly fair value gap here with the breaker as well. Okay, you can call this a unicorn, but sweep turtle soup long into a fair value gap that we now deliver from. Okay. And this chart can almost look 50-50 just because on the monthly time frame it's kind of hard to see, but we're in a big monthly range, and that makes everything a little less probable. You see people on Twitter shorting the dollar right now. Even people that I talk to every day, they're kind of arguing this dollar bullish, bearish. But yet, I focus on what I'm seeing and take the trades that I'm seeing. I don't know. So sorry. But yeah, on the monthly time frame here, we close within this long wick here, also with a long wick, forming what you can maybe see as a rejection block. But the reason that I don't call this a rejection block is because we didn't sweep the level of sell side here. We're already delivering from it. So this could just be a redelivery from the fair value gap. Because the long wick, maybe wanted to get filled to and through, but then we had some, maybe a weekly or a daily, PD array that we didn't have mitigated, that we mitigated. and had an SMT down here with a correlating pair, maybe as well. Um, and that's kind of my fault for not go ahead and doing that. But uh, I'm just going over the trade we're having right now, and I can't remember. We can have SMT with Euro or with JPY USD. So we might try and look for that here in a second, but want to mainly enforce just the basics and I don't want you to be trying to, you know, long or short something like this because it's 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 almost 50-50. And you can see it one way or the other. Um, but within this range, sweeping both sides. Um, you know, you could look at this both ways and have a different bias. And sometimes that's the truth of trading. There's not an obvious draw on liquidity. There could be something that you're not seeing. Um, and with everybody in your ear, or looking at everybody else's opinion, you're never going to be able to form your own solid opinion. But now here on the weekly time frame, we have what I call a wick PPR. You also have a rejection block and a weekly breaker. Technically a monthly breaker too. And we haven't taken out the slow. Failure to close within this wick. Right, so I'm gonna drag this chart over because as you can see on the GPB, we have an SMT above the high. A turtle soup short. So we're looking to take out the low of the range now, as well as Euro. We start delivering from this, what we can call a wick BPR, order block, whatever. But we also S&P with GPB. Also, while US or the Japanese yen to the dollar is expanding upwards, as well as looking to take out this upward buy or the highs at the buy side level. Also responding from this order block after forming a breaker and equal highs. Okay, so all the markets are pretty close to correlating. Just they look good lord, excuse me. They just look horrendous monthly time frame. Yeah, but still, with that being said, looking to take out this buy side level. See if we close within this wick here. But I don't think we will. I think we're gonna continue going higher. Take out this daily high right here. With that being said, we come back down into our 2 hour, a lower time frame than the monthly, weekly, or daily. And we see that, within the two obvious gaps, it wouldn't make sense to come down, sweep this sell side level, and come into this gap. Okay? So that's why I chose this gap. And that's why my eye was fixated here, as well as the order block. Um, you know, just you can look into the 4 hour order block or whatever. And the reason I say whatever is because it's not super specific when you're trading a super high time frame like this, and just basing it off a reaction with a good stop loss. And that's how all trades should be, when everything aligns perfectly. So obviously I trade intraday. Not a whole lot differently. But sometimes, when the candle's, you know, full like this, I'll be buying. Obviously not right here, but say this was a full candle, like where I bought here. Um, that's where I'm buying. Um, but with something like this, we have the market maker model, the market maker sell model, excuse me, to the sell side level. We sweep it, and we don't, you can be precise here and kind of flex, whatever, cool. Um, but you can also wait for confirmation. We form the breaker here. See this maybe as sweeping the sell or the buy side into a short soup, but this is how I was seeing it. Um, and based on the high time frame, that's why this would be invalid because of order flow and where we're now delivering from. And I feel like order flow has changed within this area. Let's go to the 4 hour real quick. I feel like order flow has changed right here. Okay. You have your rejection block. Your rejection block closes. And you have a super small wick. And look how we react off of this wick area. Okay? So you can almost form your entire wick as an order block. And yes, I said that correctly. You form your wick as an order block. Okay? And you can put OT on this and, let it come into OT or, high time frame. Uh, we're reacting and waiting. So it doesn't come. We see this and we wick above, take out the high of the close of the candle, come back down and close, and we start ranging. Go into the end of the week, or excuse me, go into the end of the week here, into the start of the week, and then Monday, break up Tuesday, and then form a low of the week SMT. Well, I don't want to say SMT, excuse me. But we form not a low of the week because we had the low of the week on Monday, but we form um, a retracement back into our order block uh, on Wednesday. And just depend on your weekly profile, monthly profile, because we saw with NQ on our previous trade, we had the weekly profile of the Tuesday low of week. And obviously, you don't have to predict the weekly profile on a Monday or Tuesday. You can wait, react, and see where we're going and where we're headed. Um, but yeah, we start to react off the order block. And I think I was in somewhere here, not off the market structure shift, but off a low time frame retrace. Um, and then I think I was also here on this wick. Uh, as we can see, the soup into the 4 hour fair value gap after creating a breaker. So with order flow, and now that I feel order flow has changed, we're gonna fill this long wick because I feel like this is not a key area. We don't wick into a key area. We just wick up into a fair value gap, kind of mitigate it a little bit, and start to range. Okay, you see how that's a lot different than our wick here, where we wicked into a key area, a key high time frame area, and then responded a lot differently. Um, we respond with a candle that indicates that we're going to want to take out the buy side level, right? So we come up, take out the previous candle range, start to distort a little bit, come up, breaker, order block, breaker, order block again, take out uh, shorts here. Bam, we're in long. Induce liquidity, draw liquidity into the market, engineer liquidity. Correct. And then we leave some obvious gaps, with this being the most obvious. With our wick that was filled through and through, you can set OT on just this wick. You can do it just like this too, which is what I did. But the reason I'm saying like this is, to have more of a larger key area. But I'm gonna mark exactly what I had, and which was this. And seeing how quickly we left this area, because it's pretty close to OTE. I think 50% of the range is right here. Actually, we'll go ahead and just show you. Of course, I do it wrong. Scrub, don't know what I'm doing, of course. 50, and then, yeah, OT is a little bit down here. Don't come all the way into OT. Do like we did last time till our candle closes. So, but we come under equilibrium. So it's range high, equilibrium, and that's what we're going to get into here shortly. With if you're in, like this turtle soup short, you're probably already setting, a target here because it's a sell side level, but it's also 50% of the entire, larger time frame range. So we come into our PD array, and I'm in off a limit order here. And then we just blast higher, inverse the end dog, and just continue with bullish order flow. And that's honestly what a lot of turtle souping is. It's just riding the order flow. You see it change, high time frame, go into a lower time frame, rejection block, close within. Nothing that's super interesting here. You can maybe get on this because, we have it marked here as the turtle soup of the range. We're ranging. Fake market structure shift down into the wick BPR. Okay. And then create an order block. Right. We have this marked for the rejection block wick, but we're gonna go ahead and delete this. And look where we step into. In log, inverse, equal highs. Equal highs. See a lot of similarities here. And I hope this can make it a little bit easier to find on your chart as well. Just aiming for equal highs like that. Right. In log. Equal highs. Range. Sweep the range high. Sweep the range high. Fake market structure shift. And I know it's to create equal highs, but accumulation, manipulation, distribution, which ends up being a double manipulation, okay? And I know that sounds confusing, but by me trying to say it this way, I hope you try and see it in a different way, because I've started seeing it like this, and it's almost like a power of 5, but you just call it whatever you want. See it as what it is. So you have your accumulation. We never manipulated down, so there's no reason to go higher. I know we have equal highs, um, but um, I see that as manipulation up and a fake out. Wick rejection block. Leave more equal highs. Inverse all of this. Sweep the, original range that we swept. Come into the order block. Turtle soup long. Leave more equal highs. Might come into this fair value gap or respond to this order block here. You see how we left a fair value gap here? Starting to form a range. Accumulation, manipulation. I think we start leading into the next day. Yeah. Respond to our order block. And see the reason we don't just keep continuing higher here is because we start responding bearishly, short-term bearish. Don't know if you see, but it's Tuesday of the week and Wednesday of the week. So we manipulate down, sweep here, sweep this actually this was news. So we a lot of times will come sweep the sell side or buy side level of news. News and time-based liquidity form a huge market structure shift. Try and build up shorts, induce shorts into the market, and then go ahead and inverse that. Come back into almost the order block, and go ahead and continue higher. Okay. All right. And then as we leave this fair value gap, like we said, we come back into it and we're in off the limit. Keeping in mind, we have our accumulations. Then just like a larger time frame. And then see where this accumulation is? Just above the other old accumulation. And then we sweep SMT, and I wonder where we're going to go next. And I know NQ and DXY look super similar, and you say it's supposed to move inversely, but you just have to go with what the market's giving you, and currently right now that's the motto of NQ is just fuck shorts, so we're gonna keep going up. uh Maybe not right now, or we'll see, reacting into next week, because obviously we're gonna we've already taken the trade to take the all-time highs buy side, so I'm not gonna be longing, uh obviously, but I might not even take a trade next week, just see what happens with the market, because there's no real reason to risk myself like that. But this is what we're looking to do with DXY and continue upwards with the market maker model. Okay, gonna go into two more key points here, and then yeah, go over the notes and then be done. As we can see, March 1st is right here. Okay, got a couple days left in the month. The reason, see buy side level, and this isn't the only reason, but on top of every single reason I've listed, uh, we have March open, sweep up, deliver bearishly, open, and I know this is really small, but at the time you can say open, high, low, close for a smaller than monthly time frame candle. Okay, time is fractal. So obviously this is a, open, high, low, accumulation, manipulation, distribution. Obviously on the monthly time frame, you're not going to see this. Okay, because it's the first of the month. Okay, it's a small candle. All right, you see what you see here, and then you lower the time frame into where it makes sense. Obviously, we're sweeping this. As soon as we, sweep, order block, breaker, VI, rejection block. Obviously, not in that. Well, let me go ahead and say it in order. We sweep, form a rejection block, VI, order block, right? Okay, you can just mark it in. It's, it's, I mean, that's what it is a lot of times. You see people in the wicks. You're not gonna get in the wick if you never market sell a candle. Okay, and yeah, when you first start, you might try and like see this as a breaker, and because you can see that, reversal here, accumulation, for some reason smaller accumulation with the larger time frame. Try and put the larger time frame with the smaller and say, oh, this is a fake market structure shift, mark it in and get blown away. But the more you do it, I promise you, you won't just mark it in and get blown out of the water. Um, that happen like it like I rarely find myself in a position like that now. And it's because I position myself within the high time frame and lower down um, to a smaller time frame or a lower time frame and wait for a reaction. Okay. You can try and catch the bottom like here with the limit order. Um, or mark it in. But, you know, it's a lot easier to wait for a reaction and get in, you know, risk free. And I say risk free, you're like, oh, you're in here. That's real risk free. But, you're not going to be able to precisely call the bottom like that every single time. Okay? You see here, we turtle soup instead of stop loss. That's, pretty marginal, right? And that's going to lead us into, excuse me, that's going to lead us into, setting stops and targets. Um, keeping in mind uh, what we just said with the monthly time frame, and everything being fractal. Monthly is going to open instead of open high, low, close. We're going to open low, high, coming into the third and fourth week. Yes, didn't want to sound dumb, but coming into the first, second, third, with the manipulation down into the fourth week of the month. And we'll see what happens. Continuing from that, we're going to go with where we can set a safe stop to keep ourselves, in the trade as long as we can, but keep us as safe as possible. Okay? So obviously, with, every trade might be a little different, but a lot of the times, as you've seen for the two trades that I've posted, or, like the four, they've all looked pretty similar. Okay? So, what we'll do, see if we can go into. Okay. I don't want to say this is obvious, but it's hindsight. But we were in here. Uh, after a good reaction. But we have a accumulation, manipulation. What seems to want to distribute, but doesn't. But you see, we come in, form a strong 15-minute rejection block, right? We'll use this one because sometimes it's hard to just see with the eye, the order block here, because you're not going above this candle high, but we'll use this candle as an order block. Wake up, we don't close above, but with feeling, coming from a key area, changing order flow. This is now an order block, okay? Come into the order block, stop below the low. This low, not this one, by the way. Oop. Right. And also with this being, or this is news, so I can't say this is a Judas, but it's a news manipulation. And I have it marked, but obviously, if we see this real time, two equal lows, long wick. Keep in mind, our stop loss is down here. We're in, off the order block, or off the order block, excuse me. Or off the breaker block, order block, whatever you want to call it. EQ are the top. Aiming for the top of the range. Right. I forgot this is DXY, so it's not going to move. But, long term. We see our original stop after we get in. If we need to drop back down, we can. Just to make sure that we see. Our original stop never comes into effect. Oh, and, marked area. Then we can mark out the next order block. Hit another 3R. And you can call it hindsight, whatever, but I'm just literally trying to show you order flow and, where you can set a safe stop after a turtle soup. 15 and 5-minute rejection block, 1 hour, 4-hour rejection block, reaction like that after a news event, news manipulation, right? We start breaking highs. Give 2 confirmations, right? 1 candle, order block, breaker, order block. We enter, stop below. You can put this low, but I'm doing this low. I'm in here, stop below this low, but that's neither here nor there. But we're in, and you see 2 easy 1 to 3 RRs that have, such a safe stop that they don't even come close each time. You know what I'm saying? And then you see we've hit TP, do another soup, another news event. See that we're coming into another key area, leaving equal highs at previous day high. Come in, 15-minute rejection block. If it leaves like this, with that 15-minute rejection block, not closing below this low, and reacting off the order block, you can always just get in like this. Set a super, risk less on this one, right? Stop below the low. Now form an order block. Okay, sorry, my mic just died, kind of pooped on itself. But as I was saying, you form an order block, risk less here, and then wait for a reaction. Okay, so we formed an end dog, inverse that end dog, created an order block. So we can go ahead and get in here, put our stop below the low. I'm gonna mark that low here in a second. Keep in mind for like the last 3 minutes of this, my mic died, so I'm not saying anything in real time here now, but I'm pointing out the equal highs and what we can set as our targets, which is, also pretty close to equilibrium, 50%, of our range that we've created here. But as we went higher, we jabbed straight into the order block, and also our end dog, and you can see where we can put our stop to keep us safe, and also bag pretty much close to a 6 RR. Now that we've confirmed and pyramided our entry, and this also would be an entry here, but I didn't go ahead and take it because I didn't want to put too much of that on the screen, and but putting your stop below the order block, which I'm gonna mark here in a minute, and even getting in, you know, now, with the candle, the black candle that we formed, stabbing into the order block that we just created, after stabbing into the low time frame order block. So, uh, stop below the order block low there. A news event comes in, and we still keep ourselves safe, uh, and immediately deliver, you know, and if or immediately deliver, above a 10 RR for the first trade, and a pretty decent 6 RR. And as you see, I just kind of zoomed through there, held, and held it to the next buy side level, which is escalating now into a 14 and a 19 RR. So yeah, you can see probably how big of an RR just those swings would have been. But I'm not sitting here labeling RRs because I don't really care about that. Uh, I just care about making money and you know don't want to say being right, but putting myself in the best position to make money within the market and keep myself safe at the same time. And um, with stops like this and entries like this, you can see even to the first take profit, it's a 6 RR. Then the other one is going to be a 3 RR, or close, or I guess I didn't go back down, but it's at least a 3 RR from that first order block entry. Um, but yeah, we're going to go over the notes here shortly, get into those. Um, and also I'm going over here just the order block, and then how we inverse the end dog and then reacted from it. Excuse me. But yeah, we're going to go ahead and go over the notes now. Okay, so congratulations if you've not fallen asleep and made it to the, notes section of the video. Pretty simple notes, just kind of going over what we, went over within this short period of time. Um, just showing bullish order flow and bearish order flow. With bullish order flow, the highs are being broken, lows being rejected. With those lows being turtle soups, and or SMT turtle soups or SMTs. Um, the bullish PDAs that we start making, as I was showing with the order blocks, they start getting respected, while the bearish PDAs, like the inverse that I was showing, gets inversed and starts getting disrespected. Um, and you can say the opposite thing with the bearish order flow. With lows being broken, the bullish PDAs start getting disrespected, while the bearish PDAs are being respected. Um, we showed the power of three with the accumulation, manipulation, distribution, as well as the open, high, low, close, and as well as how time is fractal. We have a higher time frame open, high, low, close, within a lower time frame open, low, high, close, with them being opposites but also being aligned in the same. If it sounds confusing, um, but you just have to keep in mind that time's fractal and it's within different time frames. So I'm not just saying you know one time frame is the strongest and it overrules. You have to put them all together and make almost a good piece of music where the melody's strong, everything is correlating, everything sounds good, and it just flows really well. Um, and there's you get like with that turtle soup long, you get in and it just starts shooting straight up. Um, you almost want every trade to do that, and not always will it happen. Um, but with good ones, good turtle soups, you can just see the order flow change, start creating breakaway gaps and reacting to order blocks, and creating breakers, and just change order flow and start going along with the way that you want to see it. We went over the true open, the month open. Um, didn't go over midnight open, but that's another form of true open. We'll go over that here in the future. We went over rejection blocks. Not not gonna read out everything listed. Just a good idea for a rejection block is a 1-to-1 ratio with the body to wick. After sweeping a sell side buy side level. Um, So yeah, we also went over what's a safe stop loss, where geez Louise, where we can keep ourselves safe, and where to target as well. Usually around 50% of the range, at a opposing buy side level is a pretty good target. As well, if you're not wanting to hold that long, it's a short-term trade. An opposing mitigation, which whatever that be, a fair value gap or an opposing order block. Um, because you're not quite sure if it'll run that high or if we've SMT'd at the high. It's not bad to take profits. Never bad to take profits unless it's like a 1 RR and you're just not holding. Then you just need to, kind of backtest a little bit more and become more confident. Um, but yeah, we went over obvious gaps, which ones get retraced to, which ones don't. Aligning with time and also price, and why we leave some gaps open. Okay. Um, I think that kind of goes over everything we went over. If you always have any questions, you put them in the comments section. Um, and yeah, if you made it to the end, you can put tomato cherry or something random in the comment section. Probably will be none because I sit here and talk and talk and talk, and I'm sorry for that, but it's just hard to get all the information out and be super concise and super, super on point without, uh, pointing out everything I see to try and make it more obvious to the viewer. Because I was there once and, I would see the market structure shift and just think, oh Lord, like, we're going lower or go higher and, be on the team breakout or breakdown. And, it was not fun times. But as we've seen with, you know, the low time frame market structure shifts into a high time frame PD array, that we usually quickly reverse, and price is looking, to um, come to that discount PD array, reprice, and um, then react from that PD array. Um, so yeah, I hope everybody had a good time. Hope everybody learned something. Um, yeah, most of all, I really hope somebody learned something. I hope I could help somebody see something a little bit clearer, open your eyes a little bit more. Um, and sorry about my mic dying for 3 minutes during the video as well. Try and do the best I can to make these more high quality, more to the point, more high informational. I'll try and make some of them shorter, but with these being the first ones, I wanted to go in depth and not show that I'm I don't know, show that I'm not capable of doing, what I'm sitting here talking about, and uh, just being fake about it. But yeah, I hope you enjoyed. I hope you have a great night, great weekend. And yeah, hope you enjoyed. Goodbye.